Earlier, I said that you have like 5, 6 companies that owns everything in the TradFi world. I think they make 30 billion in revenue per year selling this data. And so Pyth, we're more around like, let's go actually one step beyond in the stack. Let's just not source some type of data. Let's create this new type, this data ourselves, and then still do the same thing of sending this data on chain.
Hey everyone, welcome to the Smart Economy podcast, where we ask your favorite builders the questions you wish you could ask yourself. This is a production of neonewstoday.com, and I'm your host, Dylan Grabowski. In this episode, we're joined by Marc Tillement, the director of the Pyth Data Association, an independent entity working to build out the Pyth Network ecosystem. In this conversation, we discuss the vibes at the recent ETHCC that took place in Cannes, why decentralized financial data distribution is so important, the types of asset Pyth Network delivers price feeds for, onboarding TradFi, the types of data publishers and their significance in the Pyth ecosystem, how Pyth is able to support over 100 chains, and so much more. Just a reminder, nothing said on this podcast is a solicitation to buy or sell any tokens, and that the guest or host might hold tokens discussed in any given episode. You can check out a full disclaimer at neonewstoday.com. And if you enjoyed this episode, please rate and review it on your favorite podcasting platform and share it with friends and family. Every rating, review, like, and comment helps us reach more people and bring you more of your favorite guests. With all of that said, I really enjoyed this conversation with Marc, and I hope you enjoy it too. Hey everyone, welcome to the Smart Economy podcast. Today we're joined by Marc Tillement, the director of the Pyth Data Association, which is a group of contributors to the Oracle network that strives to deliver high-frequency, real-time financial market data from institutional-grade sources to smart contracts across various different blockchains. Marc, it's so good to have you today. How are you doing?
Thanks a ton for having me, Dylan. Very excited to talk to you today, and for sure we're going to have a fruitful conversation.
Yeah, absolutely. We were definitely riffing on the different conferences that we went to before we hit record. And I think before we even get going, you were recently at ETHCC. So just what's like the general vibe on the ground for Ethereum excitement? If you were on crypto Twitter last year or even the beginning of this year, everybody was dunking on the network, saying it was dead. They hate the token price. But like this is still one of the most robust networks of developers. So what were the vibes like? Are you feeling the change from like the shift in the EF, like disseminating down to the people?
Definitely massive pivot, like mentally and vibes over the past 2 weeks. And you nailed it. A year ago, it was in Brussels and everyone was complaining on the timeline. Why there? Why that? You had other ecosystem growing crazily, whether even already hyperliquid back in the days or others VM like Solana or Sui. And the past 10 months, 11 months were felt hard or harsh for the teeth, let's say. But yeah, for the past couple of weeks, and ECC marked it. The vibes were pretty much at all-time high. It almost felt, maybe I'm exaggerating, but I was at breakpoint, that first ever breakpoint in like Solana 21. It felt like surreal. It wasn't that surreal or that level of surreality, but amazing. Like so many builders. It's like most of the top, let's say 100, 200 protocols / chains were present in size. You had very little more BS's things around. It was very like long time builder in like actual institutions and not just like couple big investors or like, okay, I'm just visiting, etc. Like you had that Robinhood day. You have like big traditional companies, not only coming and seeing what's the vibe, but getting involved in shipping actual products. Whether it's the full DeFi ethos, I don't know, or we'll see, but at least they use some great tech. So that's been great. And I think even post SCC, my past 3 days of timeline were just thread about how great it was, how everyone is up on every levels. Like you can speak it into reality. Like one thing was like, okay, now everyone's mentally ready to grind. You see a bit of success. So I think it's going to be a very positive feedback loop.
Cool. I think one of the things that a lot of folks at the local Ethereum community here in Denver was upset or frustrated about at ETH Denver was that we did see these multiple blockchain networks. We saw booths that were sponsored by L2s, that were sponsored by Alt L1s. Was that sense there? Was there like people frustrated that there was something other than Ethereum at EthCC?
As far as I know, there wasn't like a purely competing VM event. Like I don't think I've seen any Solana nor Swing Aptos events. L2 for sure. I mean, they're a bit everywhere. And you have like Linea was there, like in force also. You didn't have also like very OG chain. I mean, very much Ethereum. Ethereum somehow also like being in Cannes, you price out so many other kind of companies into doing side events, etc. Of those side events, it was mostly done by things that everyone knows, whether it was ZK Sync, Linea, etc. So I had no one telling me, oh, this L2 is doing this event, I'm not going, etc. So I think it was also part of the, everyone's kind of more bullish Ethereum. Let's put for 1 week our blob or rent problems in between L1, L2 on the side. Let's just, all right, Robinhood, like L3, like no one or barely no one went on Twitter or told me in real life, oh yeah, but they're actually underpaying his security. One thing I've learned from Mikey Hill, the founder of the Labs entity that contributes a lot to Pyth Network, is everything you read on Twitter, it's not real life. And I had no one telling me, oh no, Robinhood's rent seeking or underpaying their rent for Ethereum security. So it's more like community kind of understood with Hyperliquid, like its product. Of course, you want it to be as decentralized, permissionless as possible, but best tech doesn't always win. You can win and improve on the tech. That was Solana mentality from day one, kind of product oriented. And now I think like both learn a bit from each other. Like Solana went way more into the decentralization part, etc., like core engineering, and Ethereum now more into the, all right, we can have good enough UX end user performance. Let's just get some user.
Cool. I'm definitely looking forward to delving into Ethereum and Solana and the differences between the networks that you have to deal with on a day-to-day basis. But I think you also bring up probably one of the number one points that anybody who's on crypto Twitter should really reiterate, that these people are not real. Like the Anon is not going to say the shitty thing to your face that they say as an Anon on crypto Twitter. They're probably going to be a cool, real person and have a realistic conversation with you at one of these events. But before we delve into Pyth and everything else, thank you for giving us an on-the-ground overview of what the vibes are like at EthCC. Let's just take a little step back. What's your genesis into the blockchain industry? When did you first hear about Bitcoin, Ethereum? If you were like me or so many other people, you just looked past it and continued on with your life until you had an aha moment. So what was your genesis? And then if you had one, what was your aha moment?
My first ever kind of read or heard about Bitcoin, 2017, mainstream classic media, Bitcoin all-time high, this internet Fugazi money is worth 20K or whatever. So that was my first thing. I mean, I had never heard about it. So I was like, okay. And I wasn't very much a finance guy back then or into finance. And I was like, okay, I don't care. I was just starting college back then. It's not like I had money to invest. So I was like, anyway. Did my studies, classic, moved to Hong Kong and pretty much got into crypto, pure chance, pure karma. Changing apartment, I moved into a new thing in Hong Kong. Hong Kong's like one of the most expensive rent out there. So you always kind of share an apartment. And the second bedroom was actually an Australian guy. He was like within the first 10 employee of BitMEX from back in the day. He was my age. So I guess like 21 at the time. And it pretty much hooked me up on crypto, but from the let's remove the middleman, let's not trust bank and government angle. And for the first like 6 months here, so that was like 2019, I was just trading stuff. And the first coin or network I sincerely loved was Monero. I was like, oh, you can have this complete like transfer of value fully private. This should be finances. Like, why should the government know all my balances, etc.? So very much I was Monero. I was like, this is amazing. But like just kept trading stuff. COVID crash happened. Bought my first coins back then. I was like, okay, it must be a kind of a good time after 80% flush. And DeFi summer also blossomed into something crazy. And it was my first opportunity to use those coins I had bought pretty much and be like, okay, now I can manage my own finances completely like trustlessly. I mean, it might go to zero next week. I might get phished. I might get hacked, but I have full power over my finances. And it was comparison versus the real money I had now in my bank account in Hong Kong or in France, where you're like, if I want to buy a stock, it's a nightmare. You have to go open an account somewhere or you pass through your banks, you ping them, they reply like 2 hours after the weekend. And I was never interested in doing this. Now that I could wholly manage myself, have like instant access to any type of assets, quality of these assets wasn't that great in 2020. And we're lucky enough, us Westerners, like in Europe, in the US, most of our banks don't fall every year. Our currency don't fall like 50% every 6 months. So arguably, we need this blockchain, this DeFi technology the least, apart from some edge cases. But when you actually, having lived in Asia and visited also a bit Africa at some point, like it's a completely different world. And overall, it was just like every crypto project says we need to onboard like 1 billion people. It's mostly like just bring on chain billions of people, give them access to financial product and like have them decide. So pretty much it was moving place, getting hooked because let's get rid of the middleman, using it, and it like fell in love. And after it was like, how did I stumble onto Pyth? Because I joined early 21, so over 4 years ago now, again, out of luck. Like one of my friends was working a lot and helping Mikey Hill, the founder of the labs. And he was looking for someone in the trenches. And he was like, okay, I need someone. My friend was just like, okay, I know this guy, Marc, should talk to him. And it started like this over 4 years ago. And so now my daily work is DeFi. Let's kill the middleman. Let's everything on chain. And it doesn't even feel like work.
Yeah, I mean, that's the beauty of being in this space. The thing that really attracted me was that I didn't love the field I went into after college. I loved studying in school. And that's the thing I love about blockchain and crypto is there's something new every day that you really have to study and keep on your toes to be relevant in this industry. And I also really appreciate that you bring up the point that Westerners don't need crypto and blockchain. The only time in the 7 years, 8 years I've been in this space that I absolutely needed crypto for anything was when I visited Shanghai and I had to pay some friends for dinner because I didn't connect my credit card to WeChat or Alipay. So that was like the only time in my 8 years that I've needed anything. So I think that's like a really phenomenal kind of point that you brought up. I didn't mean to cut you off, but during this in-between time, what were you doing for work in Hong Kong? And between college and between joining Pyth, you were kind of like in a marketing role. What made you realize like, okay, I am done trading food coins during DeFi summer. I'm going to go full time into this industry. And those roles in your previous vertical, how are they applicable to the work that you do at Pyth Data Association today?
So I studied business management in the UK, like bachelor 3 years. Once I was done, moved to Hong Kong, was 21 years old. And for 3 years, I was working at Gearbay, a very different industry, the radiological industry. Gearbay specifically, it's a contrast media company. When you go do an MRI or a CT scan, sometimes radiology is going to inject you some contrast media, some fluid to see your cells or whatnot. I was working in this French company in the Asian branch in Hong Kong. And this 3 years was mostly marketing related things. 1 year, for example, I was working a lot on getting the Asian subsidiary to go direct in India. So go create the Indian company there. So where do we need people? Who do we staff? Train the people, etc. All the projections, etc. Another year was a bit more salesy, and arguably it helped me after in crypto because I have no radiologist background. I am bad at sciences. And when you have to go pitch like doctor, like the radiologists, they do 10 years of study. I have like 1 month, and you have to pretty much pitch drugs to them. And so before reading white papers, I was just reading radiology clinical paper. It's much harder than crypto white paper, but yeah, spent a ton just researching. I love reading, researching. If I could, I would just do this. No work, just get more intelligent every day. So actually, this part of selling something I had no clue about, I think also helped me kind of get up to speed because using DeFi is a very different breed as selling DeFi services or whatnot. So yeah, this helped me a ton getting up to speed. And one thing also where I was lucky was Hong Kong. And this is another thing that I was almost ashamed when I left the prior company because when I said, okay, I'm going to leave for this crypto job, no one said you're crazy. Half the people were like, oh, so you must know well the cryptos, etc. Look at my wallet. And what should I buy? And so pretty much you have half of this company and like 30, 40, 50 years old that had a bunch of money into crypto. Even my French friend from back in the day, barely no one owns crypto. So Asia is very attuned to this finance life and crypto life. So this also helped me a lot. And overall, I mean, from my study, from having mingled with many crypto people in Hong Kong, the biggest regret of my life is not having done a CS major or trying to code a bit, trade a bit. And pretty much all my friends were crypto people. Everyone was telling me, just ditch your job, come work full time. And it was mostly, I guess, a mix of I'm spending more time doing crypto stuff than my real job. And then it was still, I mean, early 21. I mean, it was all big raise, etc. But you kind of knew that everything could disappear quickly. And it was kind of this peace idea, opportunity. And I understood kind of the use case. It was very much more than an infra. It was a financial data distribution business. It's like one of the biggest market on earth. And it's like a monopoly that 5 players are completely reaping the benefits from. What if we can take out this or completely redesign this? And so from, all right, we're doing a new chain to we're doing a new prop dex, it was kind of a very real life tied idea, product that kind of helped me be like, okay, I'm fine. Let's go do this. And as a big DeFi guy, Oracle's like, I love my position and when I say this is Pyth is available on like 100 blockchain. So I need to follow as much ecosystem as possible. And I enjoy doing this. And so it's what I was doing privately until 4 a.m. Now I can just do it like full time on this. So it was, good mix of parallel threads together.
Yeah, Hong Kong's a phenomenal place to kind of have your professional awakening for blockchain crypto. I was there in 23. You have Cyberport, which is just this funnel of like a Web3 and tech corporate park where a lot of companies just locate. So you have the universities funneling students into companies that are there. You have the government that has great relationships with a lot of businesses that are there. And then, as you mentioned, it's just such an advanced society in the fact that people are more attuned to having crypto wallets and having crypto on their wallets. Then you also have this unique balance of mainland is just a train ride or a bus ride away. And so you have a lot of people who might have relationships with others on mainland. And so you really have this kind of like amalgamation of why crypto is so important, because maybe there are people who do need to move funds in a way that traditional rails won't offer them. So that's kind of like a beautiful place and a part of the world to have your genesis story into starting your career in this vertical. What I think is really fascinating is how it just like vibed with you that distributed data dissemination is a valuable core part of just like these networks, blockchain, just in general. You mentioned that there are 5 to 6 centralized entities that kind of like rule the world in terms of how data is disseminated across different entities and companies. So maybe we can use this as a moment to just Eli 5 what a distributed Oracle network is and what Pyth is. Just give us like that elevator pitch and then we can jump off from there.
Yep. And maybe even before this Eli 5, I'm going to try to also tie like you mentioned, how important financial data is. And we've been using an example, like I live in Portugal and we have like 10 people working in the office there. And 2 months ago, you had this big heat wave in Portugal and Spain, and it shut down like electricity network for like a whole day. And when someone tells you, okay, there's no more electricity in your apartment, you just turn on like lights and you're like, okay, so I guess I won't charge my phone today. But when you have like almost like national blackout, throughout your day, you're going to feel it. Like you're going to try to take the elevator down. Sorry, not happening. If you have an electric garage, your car not getting out. Sorry, you have to work to the office. ATM, sorry, not working. I hope you have cash with you. You kind of arrive to the office. Nothing works. Not even my card or whatnot. Nothing works. And overall financial data is this for financial markets. It disappears like for now you have a 5-10 hour blackout around like this pure financial data that gets distributed usually from exchanges to traders, the whole market stops. So overall, and this is kind of where we focus mostly on, is basic need, high value basic need, but it's paramount. And so Pyth overall, we aim to kind of be that, we now call it like the universal price layer that aims to power all these things in the background. So this universal price layer kind of infer this decentralized Oracle network, but Pyth, core, Eli 5, decentralized infrastructure that provides, right now, just short of 2,000 price feeds with sub-millisecond refresh rate, available permissionlessly on over 100 blockchains. So very much right now, if you're a DeFi builder on any chain, you want to integrate price feeds to power your DeFi apps, whether you have derivatives product, whether you have a board ending, you can integrate Pyth directly into your app. The big idea we have more for Pyth is more than infra, it's all about the data. Because infra, I don't want to say it's that easy, etc., but it's commoditized. It's hard to get an edge on infra, or it's very expensive to get an edge on infra. It's way easier to get hedge on data. So this is where more and more we see Pyth more as a data infrastructure than pure blockchain infrastructure.
I think you bring up a very interesting point. A lot of people don't think about how financial data is moved around. Like the CME here in the US, they don't use the internet, they use radio towers to move information because it's actually quicker than hardwired internet. I'm sure you know a lot more about this infrastructure than I do, but that just highlights the point that we use these things day to day. Americans have their stocks, they have their index funds and these sorts of investment vehicles in their 401k, and they don't think about how it moves around. But this information does need to move around in a super fast and safe and secure way that is just beyond most of our heads. So we won't delve into the infra side, even though like a mesh network is probably something that would be really cool to delve into. I would also love to hear if Pyth has any relationships with mesh networks.
The one, and over on this, to not expand too much, and it's linked to crypto, you should check out 00. It's like the internet for blockchains. And they use submarine cables. Like radio waves, a big thing, or submarine cables.
I had Austin on the show when he was still at the Solana Foundation. Cool. So let's maybe then delve into the data. There's a lot of data feeds. There's a lot of different types of data. What are you paying attention to at Pyth? Because when people think of Oracle networks, they're just like, oh, I need a smart contract to know the price of Ethereum or some sort of external asset. When I was first grokking why oracles are important, the example that really started to make sense for me was like, let's have this Oracle network be able to query a website and have it tell what the temperature is outside and then bring that data on chain for some sort of trade that's related to temperature. And that's kind of like where I was able to Eli 5 the importance of this. So what sort of data and like why are Oracle networks so important in the tech stack of Web3?
So I'll start with the latter. Technically, all blockchains are clueless, free of knowledge. And Oracle are one way, and arguably the initial goal of Oracle is like fully decentralized, secure, bring off-chain or bring additional information, data point onto the blockchain so that smart contracts, code on the blockchain, protocol on the blockchain can actually trigger specific action based on different input they receive. The biggest use case ever, and arguably, I think for the midterm will stay the same, it's about price, like price of assets. On blockchains and arguably on applications that use blockchain, we trade, we take loan, etc. So most of protocols need to know what's the price of Bitcoin, what's the price of XYZ, so that when you trade or I need to liquidate, I can have a price update and things can happen. So Oracle pretty much do this. And one aspect actually, and this is where Pyth we mostly focus on, is everyone's eyes around Oracle is about putting X data on chain. The thing is, how do you collect it? Is this data any good, etc.? Because if, let's say, you imagine you have 10 validator nodes of an Oracle, if they all look at a single API, should add a bit of redundancy, resiliency, but the guy that owns the API could still put wrong value in there that gets propagated. So Oracle Network kind of resolve this trust of sending data on chain so that protocols can use it. But yeah, the big problem becomes, how do you get the data? What do you do with this data? And so overall, blockchain Oracle enable people to build actual applications protocol on the blockchain. Personally, we kind of focus a lot more on like the most valuable data on Earth. I mean, maybe it's the health data or the financial data. It's funnier to do financial data than health data, I feel. So this is where, let's say, all the big bucks are. And earlier I said that you have like 5-6 companies that owns everything in the TradFi world. think they make 30 billion in revenue per year selling this data. And so Pyth, we're more around like, let's go actually one step beyond in the stack. Let's just not source some type of data. Let's create this new type, this data ourselves, and then still do the same thing of sending this data on chain. So that's why we're a bit more in the data infrastructure, because we want to go create outright new data rather than just transfer from off-chain API or XYZ, whether it's weather, etc., to on-chain.
So can we delve a little bit then into these data publishers? When I always look at blockchain networks, they're centralized networks until you have enough of a distributed validator base. And arguably, there's only two real blockchains that have truly distributed validator sets, Bitcoin and Ethereum. So if you're trying to change the mold of how data can be brought on chain, and you're trying to compete with the traditional model, which is just leverage APIs and whoever manages those APIs, what is Pyth doing? How is Pyth trying to revolutionize how data is created and stored, and then how it's brought on chain, or maybe even pushed on chain?
No, definitely. So the idea of Pyth is going directly to those that create and own financial data. Most other oracles, you can go buy the NYSE API if you want to, and you'll contribute at this 30 billion annual revenue. But Pyth were like, if you took, this story comes from like TradFi findings. They're like trading firm, like, okay, I pay 20 million per year to NYSE. I hate it because without me, without my bids and asks in the order book, they wouldn't even be working. So pretty much exchanges, centralized exchange, they have a business. I mean, they have infra, etc. But traders are a big part of why exchanges are successful. If you have no traders, you have no volume, no fees, etc. But the worst part is with all this bid-ask spread, all this trade, the exchange actually repackage the data and resell this to traders. So it's kind of the elephant meme of the loop. Someone gives you something, you repackage it, and you just sell it back to it. The first data publisher to the Pyth network were actually trading firms like Virtue, maybe not the biggest, but top 3 biggest worldwide trader all over the world. Like, I think they trade like 20K assets from Europe to Asia to US. GTS, one of the biggest option market maker in the US. Jump trading, we had Airmax, a big exchange like FX, gold, and also now digital in the UK. But pretty much we had a cult of trading firms be like, I trade Apple stock every millisecond. I own this data because it's my fields. If we have enough publisher all contributing their own Apple fields, you can actually create a new synthetic price of Apple that's completely decorrelated from NYSE, etc. And you can actually kind of recreate a new raw, pure Apple price. And when we understood this on the legal aspect, we're like, okay, it's amazing. We can create data from those that make markets and just like sell it. So it's almost kind of the Spotify. I explain Pyth as Spotify to my parents. You have trading firms, people that own, and actually exchanges can become publisher. Like you can, Cboe is actually a publisher to the Pyth network. We have other US stock exchange that contribute their midpoint to the Pyth network. And for them, it's kind of more new data distribution mechanism rather than go to NYSE and pay for and just have 10 different people do that. We actually go find those trading firms that have this data. It's much more work initially, but what's funny in traditional finance is once you sign 1 or 2 competitor, you have all the other competitors that want it. They're like, I'm not sure I fully get what you're doing, but if they're in, I must be in. And so overall, we managed to get over 100 publishers in like a couple of years. In the past 2 years, we've lost a few. We've also started onboarding banks like Nomura, Laser Digital, so the Japanese like digital bank. So very much our edge is having been early with trading firm, big trading firm, understanding this broken system on how to source data. Overall, after, so I quickly mentioned, but pretty much every publisher continuously stream their quotes of Apple, Bitcoin, any of the 1800 price feeds we have today, every 400 milliseconds on what we call PythNet. So the Oracle runs on its own app chain. So the other angle we can do this is where the price aggregation happens and how people can then use this price on any of the 100 plus blockchain we've deployed. So we pretty much have a specific purpose blockchain where each publisher is also a validator. If 10 goes down, you still have the Oracle working. All the prices get created. So you have transparency, you have accountability, you have a block explorer. for this Oracle chain. Nothing happens there but the Oracle business. And from there, you can actually fetch proof of these prices and send them permissionlessly on any blockchain. So if you're a developer on any of these chain, you can actually use any of these 1,500 price feeds without even pinging us, asking us anything. It's fully permissionless to use, both on-chain and off-chain.
So you might have already said this in your explanation, but maybe I'm just trying to have the quiet part said out loud. What's the incentive for CBOE or NYSE or these large trading firms to publish their own data? Is it that they get to own it and they're not beholden to a third party? Does Pyth actually reward them? Do they get an upfront financial incentive?
Compared to 4 years ago, when you start pitching to those big boys, it's a much harder sell than it is today. So yes, and we have in our tokenomics, we have a whole publisher rewards and ecosystem group. Pretty much you can imagine that early on it was get them involved, get them to care, get them a stake in this. Arguably, we're competing long-term to Bloomberg, but not so much, but get them a stake in. If you contribute great data, we could actually recreate such a big thing. So early on, it was kind of more stakes, but as the network grew and the publisher cohort grew, this thing has to be self-sustainable pretty soon. We still have from the publisher rewards a whole 5 to 10 year budget where depending on the number of data you contribute, the quality of it, you actually get monthly rewards in Pyth token. Up till now, so the token went live November 23. Since then, in dollar amount, so this was paid in Pyth token, but in dollar amount, there was $60 million worth of rewards given out to publisher. So it's still, let's say, peanuts in the big 30 billion market we want to tap into, but it's already something. So yes, everyone that becomes a Pyth publisher gets monthly rewards from this bucket that was pre-planned in the token allocation. And the other part is, and this is more everyone's job that contribute to Pyth, is generate more revenue for the protocol itself. The Pyth network is governed by a DAO. My job is to get myself out of a job so that you have so many other people involved, caring, and that want to see the network succeed. That it's one thing I tell everyone at the association, if we do our job well, we're out of a job. And overall, this is where we push right now for lots of more revenue for the protocol. So that once those rewards dry out, let's say we have $25 million per year of rewards, we need to have this revenue in 3-4 years at the protocol level so that the protocol can then take over and pay those publishers. Earlier this year, we started increasing fees on chain. So whenever you do a price update on any blockchain, you not only pay the gas fees, but you also pay an Oracle fee. On some chain, we have 10 cents. I mean, we've done some tests in prod where on certain chain, we actually charge 10 cents per Oracle calls. There aren't a ton of Oracle calls, but that's one chain, one user must be $100 on this chain. And then we have a product or a stack that's very well designed to be serving as many clients as possible. By client, I mean blockchain and beyond. That it's more the proliferation of chains of arguably we're getting more and more for this Web2 financial data business, even the more retail friendly stuff, like the data you buy on AWS or something.
Maybe I'm being a bit hyperbolic, but it sounds like by distributing rewards to data publishers and also asking them to pay for Oracle calls, you're kind of onboarding TradFi. So have you seen instances where someone from NYSE or CBOE or any of these other large regulated financial markets across the world had to have somebody reach out to you guys and learn how to use blockchain, learn how to use wallets? Are you seeing at kind of a TradFi level that you're onboarding these big financial institutions?
So couple angle, when they publish data to the Pyth Oracle, the validator looked like almost a Solana node because this chain was a Solana fork because we wanted to be pretty fast. And recently we announced Signum, super crypto friendly, but traditional bank in Switzerland, or even SIBO or Memex, like these US stocks. They had to run a Solana lookalike validator. That's pretty different. And then after, when they have to send Solana-like transaction to send their price, they're like, can't I just do classic, I post you API, you read, etc. So we actually had a bunch of TradFi engineers, let's say, in big institutions, digging into how does a Solana lookalike node is. After, on the usage side of the price feeds, it's more being fully permissionless. First, we discover, especially on the institutional side, like 6 months after. Because the off-chain API, like when you use off-chain, it's fully free. So you could be Jimmy Dimon and querying the Pyth Network API off-chain, we wouldn't know. More recently, you start seeing many trading firm hedge funds that were into traditional assets, getting into crypto, or at least having crypto on the books. So they just need to value it. They don't want to create a whole pricing algo, etc. Like we had, and there are a couple of Pyth publishers tell you like, oh, I've been using your data for like 3 months. You guys are crazy giving it for free off-chain. I would have paid you like a shit ton for this because I save a bunch of time. So pure on-chain usage, not so much. I mean, we do talk to a bunch, but usually it's either they're going to launch their L2, L3, or sometimes R1. They want to have the Oracle program contract deployed on their chain. Whether it's them using it in the end or some other developers, it depends. But more often, and now it's every institution does this now, it's more like using Oracle as like on-chain distribution. Okay, I have like the big old BlackRock Apollo fund. Like I have tons of money. I'll put it here. $500 million for BlackRock, and maybe it's even higher now. Like I don't want to say it's cheap change, but for them, it's pretty much cheap change. And it's like, okay, let's go see how, and we have this bid or price feed, etc. How can it get used in DeFi, like on-chain? So it's just the toes in the water right now, but where they get very much excited, and from our perspective is, and actually now when we talk to them about Pyth, we focus way more on the data side than the pure blockchain only thing, because I mean, most of them are still kind of wait and see. Like Robinhood, like it's a whole, maybe we'll deploy the Pyth Oracle on Robinhood Orbit L3 chain, who knows? So it's still early for the pure on-chain stuff.
Would you say that where Pyth is at now is that it's actually providing a solution to a friction that exists in TradFi, as opposed to just the history of blockchain has been creating a problem for there to be a solution to?
Not coming from the traditional finance world and the market data, it's just weird that I'm not talking about this. But when you're a kind of worldwide company, you actually have like 20 different data vendors. One in the US, one in the UK, one in Asia, one for stocks, one for bonds, one for whatnot. Let's offer it all. Let's create this network and more blockchain ethos of get the whole world best trader to contribute and create this massive registry of having 30,000, 50,000 price feeds tracking all assets. So it's kind of more blockchain ethos, let's say, but still, I mean, right now the whole product runs on its own blockchain. But after, you'll get more and more, whether it's purely permissioned, like centralized chain, or, I mean, I think we'll have to fully centralized permissioned and fully decentralized permissionless, because I wouldn't be shocked if one day you get to see NYSE launching their NYSE chain just to do on-chain settlement. Like there won't be composability, there won't be XYZ, but it's just so that everyone has a pure track record, public track record of who cancel orders, who put orders, fills, etc., and not have this big like black box of, oh, we have to cancel revert trades, and then it's kind of your black box. No one knows what happens upon the exchange. But yeah, so here and there you get still a few institutions, but not the most, that are like making their assets available on chain or raising funds for any strategy they could have off chain. So mostly it's, I don't want to say predatory, but it's still kind of money driven so far.
Very cool. So when Pyth launched, to me, from just like a participant in the broader blockchain space, I kind of like grokked it as the chain link for Solana. So maybe we can talk about the genesis of Pyth. How did the entity or the network start? You already touched upon why Solana, because Solana has high throughput, it's very fast. But like, was the initial vision to just be Oracle support for the Solana ecosystem? And if so, when did the pivot happen to support hundreds of chains? If not, what was just the natural path for growth for Pyth?
So it wasn't planned at all, this whole evolution of the tech stack. But in hindsight, I think it was a natural and overall great evolution. First, Pyth product, the Pyth Oracle first version, I think was deployed on Solana mainnet. It must have been April or May 21. And back then, we hadn't thought that far ahead of how or what Pyth could look like. I mean, initially, the infrastructure was insanely light. Our first day one was just a smart contract. We just happened to have written it in Rust for Solana. But initially, the Pyth Oracle was just like a smart contract on Solana where whitelisted addresses / publishers can send transaction with metadata. And the smart contract was just at every block receiving inputs and producing an aggregate at the next block. And so publishers had to spam the Solana network continuously, so pay gas fees, etc. So our V1 was pretty much public smart contract that can get spammed by all whitelisted publishers. It was super light work. It was super easy. We could go fast, etc. A couple problems, if not more than a couple. Being on a public chain, you need to get the tokens. And given the load and the frequency we wanted, 400 milliseconds every publisher, every new block, new transaction, etc., it became insanely expensive. Like at some point, if you remove all the consensus vote, like in Solana, you have 3,000 TPS. I think 1/3 of it is like not fake TPS, but it's consensus votes. It's not like user interaction. So pretty much you have 2K real TPS. Back in the day, the Pyth publisher, on average, they were doing in between 50% and 2/3 of the real TPS. So when Sol is at $8, it's okay. When Sol's at $250, it's less okay to spend today would be millions. The pure ops cost of running this on Solana would be millions a day. So if ever we do this 30 billion revenue, we could have a DAO vote to come back to native Solana, but cost-wise, just not doable. And back then we had 10x less price fees and less publisher. It would be crazy. Second part was there was a clear need for Solana Oracle. When we launched, there was no Oracle on Solana. The only DeFi you had there was like one AMM, one club, maybe one money market, but the money market was like the V1 of Ethereum DeFi, just reading from the AMM or order book and instantly liquidating. So if you had market manipulation, and it was very risky, but working. There was a clear need. We had the contract ready. Let's just make it happen there. And the first year was great because arguably when you have no competitor, the product sells for itself. And only very recently, Chainlink very much kind of entered Solana. But yeah, it took them 3 years of Chainlink free Solana for Pyth. So it was kind of a good decision. And you had the whole last cycle brought the good and the bad on Solana. First, the downtimes. So when you have a big NFT mint, etc., it can go down. And when you're on Oracle, if all of your users are on this halted chain, who cares? They don't need a new price anyway. They can do anything. But if you try to have other people use your price feed, whether off chain or on another chain, like after 6 downtimes in 3 or 6 months, the Ethereum developer will tell you, just don't trust your Oracle. At any point Solana goes down, it's not my problem. I'm actually happy when it goes down, but it tracks your Oracle and you would drag my ass. So kind of came from, okay, what can we do from there? And as an Oracle, there could be an argument that you have an Oracle chain, you have your own perp decks, etc. You try to kind of make it the whole super app or whatnot, but it's a very different business. Where we don't need to be natively or embedded or enshrined on Solana. What do we know best? Solana code. So let's just take Solana codes, for all publisher running their validator, it's the same work almost exactly. And pretty much this app chain fork Solana did a few tweaks and it was launched in a couple weeks. And so after now we have this sovereign block space, if we want to use big term. But the only thing is it just creates aggregate price and alongside you have a proof of this price. And this is where I think the past couple of years, Pyth has grown a lot in terms of user base. And this is why we can be available on over 100 chain is Pyth doesn't need infra on those chains. You just need to deploy a smart contract on that chain that enables to verify the proof that the Pyth app chain has created. And so from there, arguably, we could have no sales team. You could just read the doc, fetch those proof, integrate, pay as you go. And this was end of 22. I think this moved to the app chain. And it was also the rise of all the kind of GMX fork, all those derivatives. You had derivatives protocol left and right. And this is where you pick if we were lucky or very bright back in the day. But with this app chain model, the pure design, it's what we call, and you actually mentioned this earlier, it's an on-demand or pool oracle, meaning that it's the developer, the protocol's job to trigger and do price update by themselves. on the positive side, that means that we can actually offer less, but the same catalog of price feeds to everyone on any chain. So it's not like you have to nudge us, oh, I'm using your BTC price on Ethereum. I need you to turn on your BTC price on Optimism. In the age of infinite copy pasta, perp dexes, etc., there was the perfect design. Don't need to call me, anyone, just on-chain, on demand. I have US stocks, I have Hong Kong stocks, I have FX, I have gold, I have crypto, I have US yield on any chain. So in hindsight, good pathway, I feel, but yeah, it wasn't that planned ahead.
Super interesting that all the data just lives on your app chain and then you just push that onto the supported networks, which I assume is just a smart contract that is built on that network to be able to interact with PythNet. So what support do you guys have to do on your end when you're implementing support for a new blockchain, if any at all, other than answering some simple engineering questions? Do you have to review the on-chain activity, the clients that the chain has, the SDKs that are available, or do you just kind of let chains come to you and then you just fill in the gaps with the questions that they have?
Kind of both ways. I think in our early multi-chain days, it was more like we don't even reach out. We just deploy, go to this chain and go name out of ourselves. And arguably, most company, whether crypto or not, you start doing everything for free. Then you're like, okay, you start getting market share. Now time to monetize a bit, etc. But no, initially, we were deploying left and right because again, arguably, if you have a vanilla EVM chain, it can be insanely easy, especially now that we have the engineers that have been deploying code like this same contract for a few years now. It's insanely easy to just deploy the smart contract on the chain. After, we could very well deploy the smart contract. Usually, or let's say natively, the Oracle itself can't push by itself. We, the Pyth Data Association, don't natively push price feeds for nothing. Like if we get gas grant, etc., we can do some intra services for people. So, you can find some of these 100 chain where the last price update on this specific environment happened maybe 6 months ago. But the thing is, overall, it costs us nothing to still have this smart contract there. If at some point in the future, one guy wants to start using, he either can spin up the infra to trigger price update himself, or he can just reach out to us and we can just either help him to do it or just do it for them. So overall, 98% of the time, insanely easy. It's just maybe twice a year. There's new features we want to have added in the smart contract, and I can alpha this a bit. It's been requesting for a long time, so it's just delayed alpha. But soon we're going to have custom TWAPs for all the EVM chain. So usually apps use directly the live streaming price. We have a feature where anyone has the ability to create his own custom TWAPs based from the live prices. So you can get a 5-second, 50-second, 10-minute TWAP. The on-chain part is just, continuously reduce the gas consumption so that it's cheaper for user, add a few features. But it's very little services. And it's more usually chains deployed, contracts deployed on chain. And now we just try to find users to do the price update themselves. And even rather than we don't want to run infra, we can very well run infra, but it's also, and it's more my spiel to the developers I talk to, is why do you want to rely on me? Aren't we all here to just not rely on other people? We have put open source code here. You can just do it yourself. We can do your backup for some time, etc. And it's true for other oracles. And I'm still somehow, not everyone, of course, but shocked at the hidden trust. Hidden, depends. Some people don't want to look towards this direction, but trust assumptions. So it's always a battle in between, okay, I want to give good UX. I'll do things that likely you don't care if I do this because you want good UX, but arguably it's still kind of important for me. It's not that I want to do less, just I don't want you to rely on me.
You're building for a decentralized world where anyone can contribute. I am well aware that we're right up on the edge of our time, but I did have one final question that I have really been enjoying hearing from builders within the space. And that is, what are some of the narratives or trends that are beginning to take shape right now and that you're keeping your eye on for the next year or two in the blockchain space? What's really got you interested? If the puck is going somewhere and you're going to skate to it, where do you think that is? What's kind of like the leading narrative that really interests you right now?
It's not going to be anything new, or at least not in the last months, because it's been the narrative. It's the whole TradFi world on chain. Right now, what do you see? Like on-chain trading. And arguably, it's more like a market of stocks, etc. But it's more like putting the TradFi world at the on-chain world speed, 24/7 markets. So it's going to take ton of time for the TradFi world to actually implement this. Like I think they already announced 24/5, but it's going to take 2 years, etc. So I think we're going to have kind of the crypto world or DeFi or blockchain world, as we know, kind of split in two, where it's going to be very TradFi, but use blockchain technology. Take some idea, or at least try to make it 24/7, try to, get it to the next, let's say, step of the world, I guess. Like, I mean, our sons will then ever understand, like, why were they even market hours in trading? Like, just have bot trading for you. It's not like you do anything. So we have this world, and we have the pure DeFi or cyberpunk, like, gonna get a resurgence, but it's gonna have to kind of branch out of what most existing chains have become. So yeah, I think everyone's going to talk about, TradFi coming on chain, especially if you're in the financial world. Like, what's the sentence? You're either smart or the first. Just be the first to come on chain. So anything real world asset, mostly around trading, I'm still not sold on, will my house be on the chain? Houses are pretty liquid, but if you have a real value proposition, it will happen. LWA trading, TradFi on chain makes sense 24/7. And that's going to be the big thing. Maybe a hidden narrative. Privacy is going to get a little resurgence. For example, with Pyth, we kind of work a lot with Paradex, Stocknet-based app chain, but DEX. And it was the whole James Swing situation on Hyperliquid. Public position, all right, let's just liquidate it. So we're going to start seeing a lot more of these again, whether it will be embedded in the chain level. This is where I'm out of my breath IQ-wise with anything security. But start having way more tooling and better tooling for like bringing privacy on chain.
I feel like I'm in good company because there's so much in this space where I feel like I'm out of my depth when it comes to smarts and IQ levels. So nice to hear that confirmation. Marc, this has been a fantastic conversation. I've had a blast chatting with you. If anybody who's listened to this is interested in reaching out to you, where can they learn more about what you're working on, about Pyth, and how can they reach out to you?
So, I mean, best is the official website of the network, Pyth.network, and you can see the whole product, all the users, all the partners. At the bottom of the homepage and on all pages, you have all the socials. So whether you're into LinkedIn, Telegram, Discord, maybe we even have Reddit now, you'll find your home. Discord's very active. And if you're a DeFi guy, come there because we're on so many chains with people running those like DeFi Alpha or go use this protocol using Pyth on that chain, etc. Pyth.network is the best. If you want to find me personally, go on Pyth Data Association.com. You have the whole team with the links to my Telegram and Twitter. Otherwise, you'll find me in the Twitter trenches. If you find someone that worked with us, either using our data, not using our data, ask them to connect us. Otherwise, Discord, classic Pyth Discord, you'll find me there a bunch of times.
Awesome, Marc. It was great to finally get this interview in the books. Thank you so much for sharing your time with us today. It was a great chat.
I had a blast. Thanks a lot, Dylan.
Cheers. Thank you for tuning in to the Smart Economy podcast. To stay in the loop with all of our latest episodes and insights, head to smarteconomypodcast.com. And don't forget to subscribe to our YouTube channel for all of our video content. If you enjoyed today's discussion, please consider showing your support by liking, commenting, and reviewing this episode on your favorite podcasting platform. Your feedback helps us reach more listeners and bring even better content your way. We'd also love to hear from you. So drop a comment on Spotify or YouTube to share what topics you'd like us to cover or who you'd like to see as our next guest. And if you or someone you know would make a great guest, please reach out. We're always looking for fresh voices and new perspectives. And for our NEO token holders out there, please consider voting for NEO News today as your council representative. We've proudly been serving the NEO ecosystem since 2017, and will continue to do so by putting portions of our council rewards directly back into ecosystem growth initiatives. Once again, thank you so much for listening to the Smart Economy podcast, and we look forward to catching you next time.